Thank you, Dan. I want to take a look now at Wall Street, where the Dow Jones is up, and it's up in a big way. Here's a look at the big board, steadying out there at about almost a 1% rise, 0.9%. Up 127 points as it sets a new all-day high. Maggie Lake joins us now with the latest from the floor of the New York Stock Exchange. I can only imagine, what was the reaction like when they almost right out of the gate, they surged ahead?
Yeah, that's the thing, Jim. It only took about a minute, and there was certainly a lot of activity, a lot of buzz, but you didn't hear cheering, applause. There was no confetti. One trader joked to me, don't expect to see it, because it feels different than it would have, say, 10 years ago. But listen, let's concentrate on what the bulls will say are their positives. We are in record territory, and we got some data from the service sector that actually helps support, so we're sitting nicely above that. Bulls will say this is an economy and a market that has really been able to withstand a lot. Look at the euro price. The drama in Washington, the budget deadlock. It looks out 6 to 9 months. The fact that you see those retirement accounts moving up so nicely, even year to date, they're up. That could create a lot of confidence, especially among high earners who are important to this economy. But the reason that we didn't see that sort of sense of celebration is because there's a lot of concern about the fact that this rally seems disconnected from the economy. A lot of average folks are really struggling to make ends meet. Corporate earnings have been good. But regular people still not sure about the future, a lot of uncertainty. A lot of people also feel this is being promoted. This rally is happening because of the Federal Reserve. That will eventually end. If they don't exit well, that could be a problem. And so there's some skepticism down here behind it, I think, Jim, which is why you're not seeing celebration. I just saw a great headline cross on the board above me saying Dow Bull gets a C+. I think it sends it up pretty nicely.
Well, all right, we look at that, and I want to examine, because I see a lot of reporting out there with, naysayers who warn that this is exactly when, I've seen the charts, it shows a lot of the little guys that were on the sidelines are now putting their money back in, and this has got that classic market buildup to where there's going to be a correction. I'm not saying there's going to be a crash, but a correction.
I think a lot of people are worried about that. And let's face it, a lot of people have been badly burned. I mean, they talk about the fact that we may have lost a generation of stock investors just because of that. When they feel good about getting in is exactly when the professionals get out. They're hit with losses at a time they can't afford it, especially if they're counting on it for retirement. It doesn't always happen that way. I mean, basically, you can't get in because you think it's at a record high. You need to look at your own needs. You need to think about the companies you're investing in. We are digging our way out of a hole. So some people are saying, yeah, we're at a record high. It took a long time to get here. Corporate balance sheets are good. So there are some real fundamentals behind it, Jim. It's not a guarantee that we're going to see a correction. And a lot of people also talk about the fact that a lot of money's still sitting in bonds. If that were to come out and shift into equities once again, this could continue for some time. But you have to be careful if you're a retail investor sitting at home not to get caught up in the emotion of it and jump in because you see it's a record high. Short term is not the way to do this. You need to think for the long term, Jim. But it's a good point to bring up.
All right. A little Father Guido Sarducci's 5-minute school of business. Buy low, sell high. Maggie Lake there at the New York Stock Exchange. Thank you. Let's take a look at it. European markets. They've got about an hour left in the day. Well, you see, look at London's FTSE. It's up 1.25%. Frankfurt up 2%. Paris up almost 2%. And 1 2/3% on the upside for Zurich. Now, several other stories are feeding into the international desk right now. Let me get you caught up on those. Washington focused on the next potential fiscal crisis, a government shutdown at the end of the month. Funding for government agencies set to expire the 27th of March. Republican lawmakers pushing a plan to avoid a shutdown. And we expect to hear much, much more about this a little later today. In Russia,